2023 was a great year for the stock market where we saw a greater than 20% return. All in a year where everybody told us that this was going to be a deep recession. But what were the best stocks in 2023? What were the worst stocks in 2023? And how is this going to help us get ready for 2024, aka next week? Let's go ahead and break it down. What I did was pull the best and brightest stocks of 23 and compared it to the worst stocks of this year, and then tried to figure out between these two lessons and lists, what should we know for 24 and how can we get ready for it. So I pulled together a short list. Let's just start from the bottom, work our way up. First here is Palantir, up 167%. We did 2 videos about this on the channel, one insider members only, one for everybody, just kind of get a general outlook of the company. You're going to see a trend here with our members only. We be on it, okay? So make sure that you check it out. It's only $10 per month. But Palantir, obviously one of those companies that you do want to have an eyebrow on. Next here is Dish Network on the opposite side of things. Dish was down 59%. If you had to, give a trivia question or you ask me guess as to why that was the case, to me it sounds like people are cutting the cord. People are moving to streaming. I don't think this is something that's new. What is interesting here is that a company like Comcast, which loosely fits very close as a competitor, they did fine this year. They also have a streaming service called Peacock because they own NBC. I don't know if Dish has an equivalent to that. So that's a question that I would ask if I'm somebody remotely looking into a company like Dish, which is not what I would do. If a company is down by this much, it's not something I am super interested in unless it has something special, which I'm going to bring up here pretty soon. On the opposite side of things, we got DraftKings. DraftKings was up 209%. 209%. For context, ladies and gentlemen, the average return is anywhere between 7 and 9%. If I open up my portfolio, find out I make 8% a year, I'm good with that. 209% in a single year is utterly ridiculous, which is great for the investors of DraftKings, which, yes, we did do a breakdown, so I remember only just a few months ago. I did say I was cautiously optimistic about the company, and the reason is because they still have room to grow, which is great. It's not legalized in every single state within the United States, which means you got a few more states that you can pick on and continue to grow your revenue. I would say over the next 2 to 5 years, it is a pretty good stock to invest in. The downside, though, is it can be a commodity, which means that it doesn't matter what you use, you're still going to get the exact same results. I could argue this is like investing apps in some way, right? If I have Charles Schwab and I have Fidelity, I could buy the exact same Apple stock and it's not going to make me any more or any less money. It's the same stock in either case, and that can be argued the same with DraftKings, with ESPN Sportsbook, MGM Sportsbook, or whatever other gambling sites are out there. I'm clearly not a gambler, but you guys get the point here. They can be rotated out. I would argue because they are a large name brand, probably not going to be them that's going to be replaced, but you do have to acknowledge that it is a risk. Next here is Plug Power. Plug Power is on the opposite side of the spectrum, down 62%. Plug Power seems to be one of the companies that they got caught up in a wave. There was a wave of cannabis companies in, what was that, 2016, 2017 or so? Everybody talked about Aurora Cannabis. Everybody talked about Scott's Miracle-Gro, and all these companies that were anywhere in and around the cannabis space, and they're all doing well for a time, and then they vanished. This seems to be a part of that clean energy, hydrogen power wave where everybody was talking about it for a bit, talking about the excitement of the infrastructure bill, of the electrification of cars, all that type of stuff, and then it just didn't turn out. If I'm not mistaken, I think this company also dropped like 20% in a single day. So that's not going to help them. Now, for me, I would argue that this company can come back around. Is it on my watch list? No. Is it something that's likely? I'm not really sure. What I would do is put this in the everything drawer. So for those that don't know, at least in black households, perhaps it's a multicultural thing, everybody has a drawer in their house where they've got pencils, pens, batteries, and everything else that's just there. A random stuff drawer. That's where I would put Plug Power. Just leave it there. It might come in handy later, but it ain't going to be today. Okay, so that's where I would put Plug Power at this point in time. Now we're moving on to the best stock of 2023. Let's all say it together. NVIDIA. NVIDIA gained 238%. And this is where I was talking about unless it has something special. Because, interestingly enough, just like I said with Dish Network, they happen to be down 59% this year. Well, what was NVIDIA last year? NVIDIA last year in 2022 was down 50%. And they came up from the grave. Absolutely, because it's not a company that you would have been super excited about. Most people wouldn't have been super excited about buying last year. I would argue Netflix was in this boat, Meta was in this boat, Microsoft was in this boat, and I didn't hold on to every single one of those companies. Microsoft, yes, but I didn't hold on to Netflix. Perhaps I should. I didn't hold on to Meta. Perhaps I should have. But each one of those companies did start to bounce back, and Nvidia being one of the best of those. And I told y'all back then why I decided to hold on to it. This camera I'm talking on, this computer that's to my right, my phone that's in my pocket, the phone you might be watching on is all powered by technology. That's not anything new, but it's not going to change. We're not moving away from technology, and Nvidia is at the center of that. It was also greatly helped by the interest in artificial intelligence this year. That was a major part of it, and it's going to continue. I don't think that's going to go away. Will I expect another 200% return next year? No, but I do expect things to go well over the next several years, and it's something that I am looking forward to continue holding. Now, what was the worst stock here, and why am I about to get some hate comments? So, I don't know why people be hating me. When all I do is cite the numbers, okay? I use a stock screener just like everybody else, and I make a cutoff for the best and the worst. That's it, okay? AMC was the worst stock in 2023. It was down 84% this year. And like I've said multiple times before, this feels like a long walk off of a short cliff. They don't make the movies, they just show the movies. And the way in which we watch movies has fundamentally changed after the pandemic. We can watch movies in some cases where released at AMC and released at home on the same day. Why would I want to go to the theater and sit next to somebody who has their shoes off when I can just do that at home in the comfort of my own home? I can pause it. I don't have to pay outrageous prices for popcorn and all this other stuff. Why would I do that? That did happen to me yesterday watching The Color Purple. I don't know why this man had his shoes off. It was weird. Anyway, that does occur, and it didn't help that there were a lot of movies that weren't good this year. Yes, we did have Barbie. Yes, we did have Oppenheimer. But we did have the travesty that was Ant-Man and the Wasp, Quantumania, whatever it was. That was terrible. You had The Flash, which was one of the top 10 worst movies I've ever seen in my life. You had Aquaman, which I don't think anybody is watching. And you've had a lot of misses. Now, that doesn't mean that every movie from here on out is going to be bad. However, I think the further we get away from the pandemic, the more used to watching things at home that we're going to get. I just think that's going to be the way until AMC finds a new inventive product other than just showing movies. I would argue they need to start doing arcade stuff and keep people into the theaters or something like that, and have that be a bigger part of the experience, or have a streaming service themselves where this movie, right off after theater comes here for a little bit and then goes to Netflix or something like that in case you really want to watch it. That's really it. They're falling into a dying industry. Not saying they're going bankrupt. I don't think theaters will cease to exist, but they do not own and control the fundamental product, which is the movie. You are only the middleman. You are literally the middleman between the people making it and before it gets to my house. Now, it used to be on VHS. Now, I can stream it, and sometimes I can stream it the exact same day. That's going to be a problem for AMC, and it's going to continue, in my view, to be one of the worst stocks for a considerable amount of time. It hasn't been good since 2021. I would argue before 2021 and before the whole pandemic, it wasn't good then either. So just be careful around investing in stocks like that. Now, with these two lists, the good and the bad, what should we expect from 2024? In most cases, you want to start off with what we call a macroeconomic outlook, which is basically what's going on in the world and what type of environment is this creating and what type of stocks do well in that particular environment. So first, let's talk about what we expected this time last year. We expected a global shutdown. We expected the Fed to raise interest rates and push us off a cliff. That didn't happen. Okay, so that doesn't mean that what we know right now in December of 23 is going to play out in all of 2024. But the expectation right now is that we know we're going to have a presidential election. I would argue there's going to be some stupid fight about the debt ceiling or something like that. And we are expected to see the Fed cut interest rates. Usually, when the Fed cuts rates, tech companies do well. So keep your eye on tech. The Nvidias, the DraftKings, all those I think are still in play. You guys know that I like Palo Alto Networks. You also know I like Arista Networks. Two companies we've talked about before on this channel, both for everybody and inside the members only. Tonight, I will be dropping a video on all the things I bought and sold for 24 as well. So make sure you're taking a look at that. And then we also know that you should find you a Costco. When I say a Costco, I don't mean the actual Costco stock. Though it is one of my favorites, though I do own it, and I think it's a great stock. What I mean by a Costco is a company that does well regardless of what happens. So if I look at Costco during the pandemic when things were falling apart, Costco was fine. When inflation was up and things weren't all that great, Costco was fine. When the economy was fine, unemployment was low, Costco was still fine. So you want to find your company that's very similar. It doesn't always have to be in that exact same space like Costco, but it is something that can help balance out your portfolio and help you do well in any scenario. So that is something that I would look to add to your portfolio and look for in 2024. We can come out with a list of companies that are similar to that if you wish. Just let me know in the comments and we can talk about that. But in the meantime, make sure you check out Members Only so you can see all the stuff I bought and sold for me and the entire family. And also if you're looking for other investing ideas and other ways to start investing, then check out these videos right here.